An IRA is a tax-advantaged retirement account that anyone looking to build wealth needs to understand. Want to be a millionaire? Invest $400 into an IRA every month for 40 years. From blue-collar Americans to billionaires, an IRA lets you compound interest on your investments with less tax interference. Today, we'll break down questions from real people who are setting up IRAs. In the next 10 minutes, you'll learn the answers to the most common IRA questions and hear about my favorite tools of how to use an IRA to maximize your returns. I'm Tom Preston, Chief Market Strategist for Tasty Live, and this is Money Makeover. Reddit post number 1. Should I use a traditional or Roth IRA? This is Samantha. She's about to move in with her boyfriend, and she makes 8 to 9 times more money than her partner. Good for her. Samantha owns the condo she lives in. Again, that's awesome, Samantha. Meanwhile, her boyfriend currently pays about $1,000 a month for rent, but is going to move into her condo. They are not engaged, but aligned on wanting a marriage. Samantha asks, instead of having him pay that rent to me, I've asked him to split the amount and pay half of it to an IRA and give me half, for which I'll do the same. The idea is that if we don't get married, his time with me will leave him in a better financial situation than had he stayed in his apartment. But if we do get married, then the retirement accounts become money for both of us. So Samantha asks, should we do a Roth IRA or a traditional IRA? The difference between them is actually pretty straightforward. With a traditional IRA, you put money into it, and the returns on those investments inside the traditional IRA grow tax deferred until you take them out when you retire. And depending on what your income level is, you may be able to deduct some or all of that IRA contribution every year from your taxable income. A Roth IRA, on the other hand, doesn't let you deduct any money from your income, but the returns grow tax-free, and as long as you own that IRA or have that Roth IRA open for 5 years, you can withdraw the money tax-free when you retire. So, a traditional IRA gives you potential tax benefits now for a tax liability on your returns later. A Roth IRA doesn't give you any tax benefits now, but has potential tax benefits on your returns later. That's the big difference between the two. Samantha, I want to congratulate you on your success. You bought a condo. It sounds like you have a decent income. Good for you. Your boyfriend, nothing wrong with the guy. He's probably a great guy, but he's still renting and doesn't make a whole lot of money. It doesn't mean you won't be a good couple, but what it does suggest is that maybe you have a little bit different outlook on money. Samantha, you might be more risk tolerant or less risk tolerant. Your investments for your IRAs should reflect that. The same is true for your boyfriend. Whatever his outlook is on money, his investments need to reflect that. And rather having the two of you argue over which is right and which is wrong and how to manage one single IRA, you're probably going to be happier, Samantha, you managing yours and your boyfriend managing his. Post 2, did I find a workaround to my IRA limit? This is from Gary. He's a big fan of Tasty Live, and he has been selling calls in his IRA against his long stock positions. And he says, the government allows a max contribution of $6,500 for 2023 towards your IRA. Even though I'm limited by the max $6,500 contribution, I'm completely free to contribute more into the funds with my realized gains. Furthermore, having realized gains from selling calls means the stock itself has been going down. So when I take these gains every quarter and buy more shares, I'm naturally or automatically buying shares at lower prices. So I'm dollar cost averaging when prices are low. So in layman's terms, Gary is increasing the amount of cash in his IRA without selling his stock by selling calls. Yeah, I wouldn't say what Gary's doing is figuring out a workaround to the IRA contributions. So it's not like Gary is pulling a fast one on the IRS or the Treasury Department or whoever. That's not what he's doing. What he's doing is actually booking a profitable trade and just leaving the profits in his account. So Gary seems pretty familiar with the strategies and how to use options. And are there any downsides to what he's doing? Well, what Gary's doing is taking the profits from his short calls and adding more risk in the same stock. So let's say he's long IBM shares and he sells out of the money calls, covered calls against his long IBM stock. And when those calls expire worthless or he buys them back for a lower price, he takes that profit and then buys some more shares in IBM. If he loves IBM, great. Okay, I have no disagreement with that. But what he might want to consider is taking the relatively small amount of money he gets from selling those calls, because usually it's not as much as a share of stock. Take that relatively small amount of money, and if he's looking to buy more of the same stock, maybe sell a put spread instead, which is more capital efficient than buying stock. Or sell a put spread in other stocks. So not just IBM, but maybe sell a put spread in Apple or Microsoft or Tesla or Google or whatever. So he's diversifying his risk. So I don't disagree with what Gary's doing philosophically. That's great. He's using options. But maybe to tweak it a little bit, maybe don't always roll the profits from the short calls into the same stock. Now, what Gary's doing is really important in that he's using a broker that lets him do this. Don't set up an IRA at a brokerage firm that only lets you buy mutual funds or stocks. Find a broker that supports option trading and option spread trading in an IRA, whether it's a Roth or traditional. Reddit post number 3. Is it even worth opening a Roth IRA if I can only contribute $50 a month right now? This is from Gabriel. And Gabriel is a grad student with limited disposable income. Gabriel, I've been there and done that. He can only contribute $50 a month while he studies, but hopes to contribute $200 to $300 a month in the future. And he asks, should I even bother? Gabriel, yes, yes, yes. You will learn more about building wealth, trading, and the markets, risking $50 now and doing that month after month after month, than you will reading books, watching videos, watching the news. Actually trading will teach you how to do it, okay? Now, with a limited amount of money, though, if you're understanding that, buying stocks is a good thing, let's say buying the S&Ps, getting along the U.S. economy, nothing wrong with that. A more capital efficient way of doing it is to sell, let's say, put spreads in SPDR. For example, 2 months, okay, we'll give you $100. And then with the SPDR, for example, right now, while I'm shooting this, the SPY is trading at about 484. I could sell the 451, 452 put spread with about 60 days to expiration for about 40 cents. That would require $60 of capital to do that trade. And if the SPDR goes up or doesn't drop, I make $40 in profit at expiration. That's a very high return on capital. And if it does drop, your risk is defined. Okay? So you're not gonna lose thousands and thousands of dollars on this. Spreads like that are a way for smaller amounts of capital to participate in the market. Now, talking about risk, Gabriel, you're kind of new to this, and you're going to hear a lot of what I think are wrong things about managing your money. Your risk profile, the risk profile of what you're comfortable with trading that you develop in your Roth IRA, I think should be the same as when you start making more money and start putting it into a regular trading account. People will say, "Oh, you should have lower risk investments in your IRA and savings accounts." Why? Why would you do that? The rules about investing in your Roth IRA, traditional IRA, means you have to hold these things for a certain amount of time. Roth IRAs, it's 5 years. Traditional IRAs is until you retire. Yeah, you can take the money out, but the money you're putting into these things isn't like a rainy day fund or an emergency fund for a car repair. That's not what it is. The money you put in here is by nature long term. As a trader, I could show you 50 trades in the past couple of months that went from losers to scratches or winners simply because I was able to hold on to them. I look for the highest potential returns. If you are not squeezing as much return from your IRA investments, you're not taking advantage of the tax benefits. It's not the money you stick in there now. It's the fact that you can take the returns out in the future, either tax-free or tax-deferred. You want to maximize the returns in your retirement accounts. If you're looking to open an IRA for yourself, Tasty Trade, Tasty Live's affiliated brokerage, has various IRAs that let you trade some of the option strategies that we talked about in this video. Now, maybe I'm biased since I helped build and design Tasty Trade, but it really is the best brokerage for anyone who wants to take a DIY approach to their finances and investments. Click the link below to learn more about IRAs at Tasty Trade, and if you want to watch more, watch my conversation with a trader who made $1 million but needed guidance on what to do next. For the tides to turn.
I just want to get to 8 figures and be finished. I don't want to deal with this anymore.
It's become a